What is going on in the car market today? Well, a severe shortage of inventory and a trend away from public transportation due to the pandemic has created a car pricing frenzy that's now set to burst. Car dealerships are witnessing a rapid drop in prices due to the changing market conditions, rising interest rates, and increased production of vehicles. Meanwhile, many buyers who paid inflated prices for their cars are now facing a crisis as they are underwater on their loans. This situation has even caught the attention of big names in the industry such as Elon Musk, and experts are warning that we are headed towards financial turmoil. In today's video, we'll delve into this issue and reveal what's really going on. But before we get started, please support our channel by giving us a thumbs up and subscribing. The prices of vehicles, especially used cars, are about to plummet after nearly 2.5 years of reaching record highs. As new supply begins to flood the market, wholesale prices for used cars have already dropped by roughly 88% in January. The average used car sold for $27,156, a 1.5% decrease from the previous month, according to Kelley Blue Book. Although new car prices are still high, the rate of price growth is slowing down. The average transaction price hit a record $49,507 in December, but fell to $47,681 in January, according to car pricing site admins. Since June 2020, used car prices have been skyrocketing due to easy credit provided to consumers at attractive interest rates and a constrained production of cars due to semiconductor shortages. Millions of drivers had no choice but to take out exorbitant loans to purchase cars because new car inventory was at an all-time low. In fact, consumers have seen the average used car cost more than a new one. In other words, the used car bubble is even larger than the new car bubble. The average interest paid over the life of a new car loan reached a record $8,436, while the average interest paid over the life of a used car loan reached an all-time high of $10,204. However, as interest rates rise and semiconductor supply increases, and Americans curb their discretionary spending, used car prices are plummeting. They have dropped by 8.8% in the past month alone, marking the highest monthly decline since June 2009, when General Motors and Chrysler were both in bankruptcy proceedings and the economy was hemorrhaging 500,000 jobs per month. It was a completely wild ride, said Ivan Drury, director of insights at Edmunds.com Inc., regarding the rapid surge in the cost of used vehicles. Some cars have already decreased in value by as much as 30% since the peak of the bubble. Despite some in-demand vehicles still commanding higher than retail prices, industry analysts predict that the value of second-hand cars will soon return to pre-pandemic levels. Falling used car prices mean that the vast majority of consumers who purchased vehicles in the past 2 years are now underwater, owing more to the banks on these cars than they're worth. All of these factors are likely to spark another automobile crisis that will have disastrous consequences. For example, a buyer who is underwater on their loan and wants to trade in their vehicle at the top of the bubble will have to spend thousands of dollars to cover the difference between the loan and the car value. Today, many automobile manufacturers and dealers are offering consumers easy access to credit, resulting in a surge in car sales. However, history has shown that this easy credit can have disastrous consequences. In the 1990s, after the market crashed, many borrowers found themselves unable to make their loan payments, leading to decreasing car sales and economic depression. A similar car loan bubble emerged in the early 2000s, fueled by low interest rates and lax lending standards. This led to a boom in car loan originations, but most of these loans were subprime, meaning they were issued to borrowers with poor credit. When interest rates began to rise and the economy slowed, subprime borrowers defaulted on their loans, causing a decline in the value of their loans and a downturn in the auto industry. The most recent car loan bubble occurred in the late 2000s and early 2010s, in the wake of the global financial crisis. With the economy still slumping, auto manufacturers and dealers once again offered easy credit to consumers. However, this bubble was different from the others in that it was driven more by demand for new cars than by easy credit. Despite the unique formation of this bubble, it still has elements of the previous ones. According to Craigmore from Craigmore Wholesale Cars, who has been in the auto industry for more than 30 years, the latest drop in prices means that the car price bubble has definitely burst. While good cars and in-demand cars that are in short supply are still holding strong, run-of-the-mill cars are either back to pre-covered prices or on the way back to pre-covered prices, and it's happening very quickly. During an interview with Drive.com, he added that there was always going to be a reckoning because used car prices could not simply continue to climb. As the bubbles start to deflate, finance companies wouldn't approve certain loans, and insurance companies wouldn't insure certain used cars because, in reality, when the dust settles, they'll be worth less than what someone was asking for them and what some buyers were prepared to pay. It has been revealed that during the pandemic, car dealers were struggling to source 1 or 2 cars a month to sell. However, things have changed, and now they are getting a dozen calls a week from people wanting to sell their cars, leaving dealers with a choice of the best of them. One 34-year veteran of the auto industry, who specializes in car valuation and wholesaling, has exposed that used car prices have decreased by about 15% in the past 3 months. This is with the exception of hard-to-get, in-demand near-new cars like the Toyota Land Cruiser 70 Series, Ford Ranger Raptor, and Suzuki Chimney. The second used car expert, who prefers to remain anonymous, told the outlet that most used car dealers are offering low prices for trade-ins because they need to make up for the losses they're now experiencing after having paid too much for trade-ins over the past 2 years. A lot of used car dealers are now upside down, so the car is worth less than what they paid for it, he said. When you're offered a trade-in, you need to aim low to make sure you're not going backward. The expert continued, highlighting that nobody really knows where the bottom of this bubble really is. That's why trade-in offers have started to dramatically calm down. I'm looking at my used car lot right now. I'll have to sell about half of those cars at a loss because the market has turned. I need to get rid of them, he emphasized. Every day those cars sit there, they're costing me money. The wholesaler admitted that the past 2 years have been the most turbulent and unpredictable time of his career. None of us know what's around the corner when it comes to prices, he told Drive. The market has never been so hard to predict. The third source interviewed by Drive said that at the height of the pandemic, they were making up to $5,000 profit per used car on average. Now they are back down to less than $2,000 profit per car, or making a loss of up to $5,000 to get it off the books. A fourth industry expert, a dealer principal of a network of multi-franchise showrooms, outlined that used car prices are settling, but they still have a waiting list. What we've seen evaporate almost overnight is people paying $5,000 or $10,000 over retail to jump the queue to get into a near-new car. People have been conditioned to wait, he stressed. According to researchers at Moody's Analytics and JP Morgan, used car prices are set to fall another 20 to 25% in 2023. New car prices could drop by 5 to 10% in the coming months. However, we still have an alarming number of Americans with auto loans scrambling to make monthly payments. Auto loan performance saw further deterioration over the past 30 days, and loan delinquencies have also jumped. Of all loans, severely delinquent ones have reached the highest rate since the financial crisis about 15 years ago. New bone-chilling data released by Cox Automotive sheds light on the rapidly deteriorating auto loan market. Loans delinquent by more than 2 months increased by 5.3% and jumped 26.7% from a year ago. Loan delinquencies and defaults are sending shockwaves through financial markets. In its latest earnings call, Wells Fargo reported a higher loss ratio from auto loans compared to a month ago. Ally Financial, the biggest car lender in America, saw charge-offs quadruple in the third quarter, which pushed its stock down by roughly 50% year-to-date. The used car market has experienced a significant decline in prices over the past few months, with the exception of highly demanded and hard-to-get cars. Used car dealers are now struggling to make a profit due to paying too much for trade-ins over the past 2 years, and some are even selling cars at a loss. This situation has been exacerbated by the deteriorating auto loan market, with many lenders facing losses and defaults on their loans. Industry experts are warning of a potential financial crisis, and it's important for buyers to be cautious and patient before making any big purchases. Don't forget to subscribe and enable notifications to view future videos about global economics and business.